Welcome to the deep dive.
Great to be here.
Today we're digging into India's latest industrial production numbers. These are for March 2025.
Right, and our main source is a report from Antique Stock Broking Limited, which came out just yesterday, April 29th.
Exactly. So our mission today for you listening is to get beyond just the headline figures. We want to understand the key trends.
Yeah, what's really driving things? What do these numbers suggest about where the Indian economy might be heading?
Is that industrial engine running smoothly, or are we hearing a few maybe misfires? That's what we're trying to figure out.
Precisely. It's about understanding the why behind the percentages, not just the numbers themselves. That gives us a better sense of the future.
Okay, so let's kick things off with that headline number. The overall index of industrial production, the IIP, what did the report say about the big picture?
Well, the overall IIP showed growth of 3.0% compared to the same month last year, so year over year.
3%, okay?
Now, it's interesting because that was actually a little lower than what analysts were generally expecting, which is around 3.3%.
Ah, okay. So a slight miss versus consensus.
Right. But on the other hand, it was an improvement compared to the previous month. February's growth was 2.7% year over year. So a bit of an uptick month on month, even if slightly below forecasts.
Got it. So a nuanced picture right from the start, isn't it?
Definitely.
Now let's zoom in a bit. Manufacturing is, well, it's huge. The report says it's about 78% of the whole index. How did that specific sector perform?
Manufacturing also grew by 3.0% year over year in March, matched the overall rate.
Okay.
But what's really insightful is when you look within manufacturing, it wasn't uniform growth at all.
Right. You always get variations under the hood.
Exactly. So some areas showed pretty healthy growth. Motor vehicles, for instance, look strong. Same for electric equipment. But then on the flip side, food products saw a noticeable slowdown. So this internal dynamic, tells a much richer story than just that 3.0% figure.
That makes sense. Different demands, different pressures. Can you give us a bit more detail on those specific manufacturing areas? Who were the sort of winners and who was lagging?
Sure. So among the stronger performers, besides motor vehicles and electric equipment, we saw good year-over-year growth in things like tobacco products,
Okay.
machinery and equipment, basic metals, and also other non-metallic mineral products, things, cement, that sort of thing.
Which points towards construction, maybe.
Very likely, yeah. Seems to reflect ongoing activity there. Now, the weaker segments,
Yeah.
besides food products, we saw less impressive growth in chemicals and pharmaceuticals.
Interesting. Pharma, too.
Yeah. And also fabricated metal products and other transport equipment showed weakness. So it's quite a split picture.
It really is. Suggests maybe different parts of the economy are feeling different things, maybe some export drag, some domestic strength.
Could be. It certainly points to different factors at play across the industrial landscape.
Okay, let's shift gears slightly. The report also slices the data by how the goods are used, the use-based classification. What did that show? Any standouts there?
Oh, definitely. This view gives some really interesting contrasts. Construction goods, tying back to what we just mentioned, saw really strong growth, up 8.8% year over year.
Wow, 8.8%. That's quite high.
It is. It really seems to back up the idea of that government infrastructure push having a real impact.
Makes sense. What else?
Consumer durables also showed strong growth, up 6.6% year over year.
Okay, so durable goods, appliances, electronics, that kind of thing.
Exactly. Things people expect to last. So it suggests maybe consumers are still willing to make those bigger purchases, perhaps some pent-up demand still, or maybe seeing value in those long-term investments.
I feel like there's a but coming. What about the everyday stuff, consumer non-durables?
Got it. That's where the picture changes dramatically.
Yeah.
Consumer non-durables actually contracted. They were down 4.7% compared to last year.
Down nearly 5%. That's significant.
It is. And this contrast, strong durables, weak non-durables, is quite telling, isn't it?
It really paints a picture. Maybe people are okay buying a new fridge, but cutting back on, I don't know, packaged foods or toiletries.
That's one interpretation, yes. It could suggest households are becoming more cautious with day-to-day spending, perhaps feeling the pinch of costs, even while committing to larger purchases.
And the report mentioned overall consumer goods were actually down slightly despite those strong durables.
That's right. The overall consumer goods category dipped by 0.1% year over year. So the drag from non-durables basically canceled out the boost from durables.
Fascinating divergence. What about the other use-based categories, like primary goods or capital goods?
Yeah, they showed moderate growth. Primary goods were up 3.1% year over year. Capital goods, which can be a pointer to investment, were up 2.4%. and intermediate goods grew by 2.3%. So positive, but not as dynamic as construction or durables.
Okay. And just quickly, the other main sectors outside manufacturing, mining, and electricity.
Right. Mining saw pretty modest growth, just 0.4% year over year. Electricity generation, though, was stronger. It grew by 6.3%.
Which kind of supports the activity elsewhere, I suppose?
Exactly. You need the power to run the factories and build the infrastructure.
Okay, so that's the snapshot for March. Now, let's look ahead. What does the antique report suggest about future growth drivers? Are they optimistic? Any risks flagged?
Generally, yes. The outlook for domestic growth, especially starting from fiscal year 2026, seems pretty optimistic based on their analysis.
What's underpinning that optimism?
They point to a few potential tailwinds. On the monetary policy side, there's talk of, well, potential adjustments, maybe rate cuts later on, adjustments to risk weights for banks, things to keep liquidity flowing.
Okay, so supportive central bank action.
Potentially, yes.
Yeah.
Then there's fiscal policy. Continue, maybe even higher government capital expenditure, particularly on infrastructure. And also the possibility of lower personal taxes, putting more money in people's pockets.
Right, stimulating demand.
And the third factor is easing inflation. If price pressures continue to moderate, that obviously helps both consumers and businesses.
So sounds like a decent setup for domestic growth, potentially. But what about the outside world? Any external risks?
Ah, yes. That's the main caveat they highlight. The global economic picture is still pretty uncertain.
Still murky out there.
Indeed. And that could act as a significant drag on India's merchandise exports. If global demand slows down, then obviously our export-focused industries will feel that.
So that's flagged as the key downside risk.
Yes, precisely. Strong domestic drivers anticipated, but the global uncertainty, especially around exports, is the major potential bump in the road.
Got it. Strong currents at home, potentially choppy waters abroad. Makes sense. And finally, they included a summary table, Table 1. What was the key takeaway from that?
Yeah, the table is useful. It basically just pulls together the growth rates year over year and also month over month for the overall IIP and all these components we've discussed.
Our last few months.
For January, February, and March 2025. So it lets you see the immediate trend, not just the annual comparison. You can see that little uptick from Feb to March in the overall number quite clearly, for instance.
Right. Gives you that short-term momentum view. Very helpful.
Exactly. A quick snapshot of the recent trajectory.
Okay, so let's try and bring this all together. This deep dive into the March industrial data shows, well, moderate overall growth.
Yep, at 3.0%.
But with some real bright spots like construction goods and consumer durables showing strong dynamism.
Definitely standouts.
Contrasting sharply, though, with weakness in areas like consumer non-durables and a bit of a mixed picture within manufacturing itself.
That divergence is key. Absolutely.
Looking ahead, the domestic outlook seems cautiously optimistic, boosted by hopes for supportive policy and easing inflation.
That's the base case scenario presented.
But tempered by that significant risk from global economic uncertainty potentially hitting exports.
That's the main watch point.
So it leaves us with a really interesting question, maybe for you listening to chew on. Considering these different speeds across sectors and these potential tailwinds and headwinds, which specific industries do you think are actually best positioned to thrive in the coming year here in India? And maybe on the flip side, what global factors? Is it energy prices? Is it demand in Europe or the US? Is it supply chains?
Yeah.
What do you think will ultimately have the biggest impact on India's industrial path forward?
That's the million-dollar question, isn't it? Lots to think about there. It's definitely a complex picture with plenty of moving parts.